All right, everybody, welcome back here to the channel. The entire AI trade is shifting. And of course, these memory names, any of the semiconductor data center plays, to me, they're still great plays for the next 3 to 5 years. But I don't think they're as good as robotics and physical AI. And in this video, I'm going to talk about how I'm positioning right now, how I'm shifting my focus more toward physical AI now. And some of the spending has slowed down, although June jobs report has kept the Fed focused on inflation. June's cool payrolls report will likely keep the Federal Reserve on hold for now while leaving the door open to rate hikes later this year. And so we don't have a lot of easing happening anytime soon, but we could see SanDisk on a big pullback today. Okay, SNDK, big part of the AI trade, down 14% today. Now, we're getting, again, some cool downs here in some of the big names. It's nothing to run out of these plays or anything like that, right? I'm not going to say, oh my gosh, it's all over here. But the memory names, SanDisk and Micron, I mean, these names have just been absurdly popular. They've been very successful, and I think they still will be. But I'm trying to play the next generation here. I'm trying to play, okay, if memory and all of this stuff is here, we've kind of missed the big, 5, 6, 7, 8, 9, 10 X's on these. What's next? And I actually think physical AI could become the biggest investment theme of this next decade. We're going to break down some things I'm looking at it, and it could potentially be on par with cloud computing in the 2010s, if you guys remember that, or generative AI in the early 2020s. The market is largely focused on AI models like ChatGPT and Claude and Gemini, right? And really looking at the chips like NVIDIA, and we're getting, pullbacks across these sectors. But the next phase is about giving AI the ability to see, move, manipulate, and interact with the physical world. You can see NVIDIA's pulling back a little bit from some local tops. I remember when it just made that move from 160 all the way up to over 200, pulling back a little bit below 200 right now. You can see it. But think about this. You had the internet, which connected people, cloud computing connected businesses, mobile connected everyone, right? Worldwide. Generative AI. Now AI can think, they can write, they can reason, they can go query data, right? But the next step is physical AI. And I think instead of answering, the question, AI will, do all these things, harvest crops, perform surgery, build cars, which I think it's going to do all of this. Just listen to NVIDIA CEO Jensen Huang when he talks. He's repeatedly said the next wave of AI is physical AI. Okay? Physical AI is continued to be at the top of his list. Now, there's a ticker out there that I really like right now called RoboStrategy. Now, RoboStrategy is down a little bit today, down 10%, but when you blow it out the last month, it's up 39%. Year to date, they're down 39%. It's very new. It just launched in May. But when you look at kind of where we're heading, and I'm going to tell you why I like RoboStrategy here, we're heading into a world where factories are going to be becoming increasingly autonomous. Companies such as Tesla, Figure AI, they're all pursuing humanoid robots. And so Amazon has already deployed hundreds of thousands of robots, and I expect that number to continue to grow. So you got autonomous trucks in the logistics side. You got warehouse robots, inventory robots, home robots, delivery robots, robot-assisted surgery, hospital logistics, medicine delivery, patient monitoring, autonomous excavators in construction, AI surveying, inspection drones, heavy equipment. This is where it's heading, physical AI. Drones have been a big part of this conversation as well. We'll go over a lot of the drone stocks that I'm looking at in a later video. This is why you have to subscribe to the channel. But RoboStrategy specifically, in order to get access to the robotics companies that are private today, this is the play, RoboStrategy, in my opinion. All right, this is what I'm personally putting my money into. I'm going to DCA in here. Eventually, I want to make this about 8 to 10% of my portfolio in terms of my individual stack. and my individual themes. I want to make robotics about 8 to 10%. I think we're a little ways out, right? But we're talking about catching the next big wave. I think that's where we are in this whole progression. You know, layer one was AI chips. You had NVIDIA, you had AMD, then you got memory, the Microns, the Samsungs, the SK Hynix, the SanDisk. Then you had networking, which is still kind of moving. You got Marvell, Broadcom, Cisco. You got the power companies like GE Vernova and Vertiv. You've got data centers, obviously massive there. You can find things in networking and cooling and infrastructure builders. Then you've got robotics. You know, Teradyne is another name that has come up quite a bit in my research. This is another name, I think, certainly one to watch. It's up, 86% year to date on a nice pullback right now. I think Teradyne still looks very good for long-term growth. Fair value, they're putting it at 275 right now. Stock's trading at 372. Could there be a little bit of a pullback? Maybe, yes. But these are names for the next 3 to 5 years. ABB as well, which I don't think you can get access to in the U.S. Rockwell Automation is another small cap play, up 20% year to date, just been kind of grinding higher. More of a smaller cap play when you look at where it's at, but still not that small. I mean, 53 billion. But I think these are, hundreds of billions of dollar companies once automation fully goes on and progresses. So I think the robotics trade is very, very live. And, I think we're going to continue to see the AI trade perform well, do exceptionally well, but I'm trying to catch the next big memory names, right? I want to get out ahead of the next big thing, and I think it's physical AI and robotics. And so that's where we are today. Just wanted to update you quickly on that. Take a look at RoboStrategy. Take a look at Teradyne. Take a look at Rockwell Automation. And, many of the humanoid robotics companies that are out there today, one that's in that RoboStrategy ETF that I really like, Figure AI, they're private companies. And the hope is that we're going to be able to capture one of these big next generation robotics public companies that eventually goes public. And we've already got great exposure to this company in this ETF and RoboStrategy. Figure AI is the one I'm watching. There's a lot of other ones in there as well that are interesting. And we're hoping one of them becomes Claude. One of them becomes Anthropic. One of them becomes ChatGPT and OpenAI. These were all private companies. They were all private startups when things got, in the beginning phases, when things got started. They became behemoths. And I think we're going to see similar trajectory for the robotics and automation industry. And that's why I'm investing now ahead of the curve. And that is what we do on this channel. We get out ahead of everything new technology within the AI trade, robotics. That's why you subscribe and hit that like button. Drop your comments down below, and we'll see you all in the next video.